Okay, welcome everybody to what is for sure the most important panel of the day. Not because I'm on it, but because I have an incredible team of panelists that are here. I got to receive the phone call by Charlie Chaim Lefkowitz. Much more, hold on, I usually say eat the mic, so it should be all right. Hold on one second. Okay, is it better? It was fine. Okay, we'll start again. I'm kidding, we're not going to start again. So we have an incredible panelist here. Chaim Lefkowitz called me up. He said, look, I do this thing called LifeCo. It's basically I'm a mortgage broker, but I get funded from life insurance companies. Very interesting stuff. And I want the world to know about it. We'll discuss it more here because it's a little bizarre. If you know how to make money, why are you telling other people? So we'll have to figure that one out. And he invited several professionals from this industry to come on stage. So I want to ask everyone like this. People always have questions. They want to ask the panelists. They want to ask in the middle of the panel. If you have any great questions, here's what you have to do. Don't do anything. Wait till after the panel. And they're going to hang around all day and answer all your questions. No problem. I already discussed this with them previously. And if they didn't know about it, they know about it now. But you'll learn a lot about finance, about this whole world of life insurance, and hopefully be fun and entertaining as well. So I want to ask everyone to give a huge round of applause as I call Chaim, Matt, Anthony, and Jeffrey to the stage. Let's go, guys. That's my base intro. And now that we got that out of the way. All right, welcome everyone. So I'm gonna go like this. I write a weekly business column for Ami magazine called Lunch Break. It's, I would say, pretty successful business column. And one of the things I do there is I ask everyone to introduce themselves and give their background. Now the reason why that's so important is because as much as you guys are experts in your field, they don't know that. Like, who says they don't know anything? So the more you have someone's a little bit of the background, they'll connect on a real deeper level. Let's start. So I'm going to ask for 2-3 minutes of everyone. Now, Chaim asked that I should direct all of the questions not to him. So this is the only time of the day that we're going to give him a pass, but for only 3 minutes. So Matt, we're going to start with you. Let's hear your background story. Tell me where you come from. How do you get to what you are today, and what do you do today?
Great. Well, thanks for having me. My name is Matt Shane. I'm originally from Los Angeles, California. I started my real estate career at CB Richard Ellis as an analyst out of college. And worked there for 5 years. Then I got into the finance business where I worked for a company for 20 years where we're a life insurance company, correspondent, lender. I recently left that firm and started my own company. So we are a direct life insurance company correspondent where we service the loans and that's me. I currently live in Detroit, Michigan.
Wait, and here's the cool part. His name is Matt, but what's your Hebrew name?
Matityahu.
Matityahu. There we go. Hey, by the way, you realize that if you say Matityahu in business, they're going to remember you a lot more than Matt. Yeah. There's no question, right? There's no question. Oh, he's Matityahu. It's going to go a lot cooler. Okay, now that you heard, now. So, Chaim, Charlie, what's your background story?
About 10 years ago, I
His mic definitely needs to be raised, there's no question. Go ahead, yeah?
started doing my own real estate, buying, selling, flipping. About 6 or 7 years ago, I did a lot of loans for myself and other people. Half of them, right when I closed the first loan about 7 years ago, I fell in love basically with lending. Lending has a side of it that if you do somewhat success, you don't want to go anywhere. You literally either like it.
That's because you like making money. Is that because?
It was nothing to do with the money part.
Okay.
It's more the complexity of a real estate deal, getting it closed, from finding a bank to good borrower to underwriting it to appraisal, environmental, legal. The complexity is what drew me to lending, from buying and selling and building and being a developer.
So when did you get this life insurance deal?
About 4.5 to 5 years ago, I finished my own construction. The options were very limited to get refinance after the construction. Somebody told me about a product, LifeCo, life insurance. It took me about a year and found out exactly about the program. And since then, it's a happy marriage.
Happy marriage. Well, no one knows what it is yet, but we'll feel that talk in a second. Anthony, let's go to you. I had to bring some young guy on stage, so we all look seasoned. Anthony, let's see, what's your background?
My name is Anthony Lutzai. It's a pleasure to be here, and you guys done a great job putting this event together, so it's a pleasure to be here.
Awesome.
You know, real estate for my normal days with my father have been driving around town looking at real estate, so I've always had an inherent interest in real estate, and by the time I was ready to graduate high school, my father asked me, well, what is it what you want to do? And I was pretty shocked because he never asked me that question, and lo and behold, he just didn't want to waste his money on me. So I told him I want to get into real estate. So I stayed in Metro Detroit, where my father has a little small real estate portfolio, and I helped reposition that for about 2 years. And I just fell in love with real estate even more the more time I spend it in real estate. So after that, I went into investment sales for a little while. I did corporate real estate where we did headquarter transactions, lease restructurings, built-to-suits. Did that for about 7 years, and then COVID hit, pretty much killed that sector, and then interest rates in turn dropped. So I thought it was a very opportune time to get into the business. Interest rates were low, and my father never borrowed a dollar, so I thought maybe this is a great way to learn. So that's how I got into the business.
Of the roles that are here on stage. So Chaim Charlie, he's a mortgage broker whose expertise is life insurance, meaning to say he doesn't sell life insurance. Good luck with that today. But he's able to fund these loans through life insurance companies. They're the provider of the money. Matt is what do you like to call yourself? The correspondent. Yeah. He deals directly with the life insurance company to get the loans funded. Anthony is the underwriter, and we have the token Jewish lawyer. So Jeffrey is in the corner, and he helps. So Jeffrey, let's take what's about your role? You're the lawyer. You help go through a lot of these deals. First of all, introduce yourself a little bit.
All right, my name is Jeffrey Goldstein. I've been practicing law since 1996. I've always been in the real estate arena. I've represented over the years, who I represent has always remained pretty much steady and the same. I've done it in small law, I've done it in big law. I worked for one of the largest law firms in New York. And about 2 years ago, I get a phone call from Charlie Chaim Lefkowitz, my good friend, and saying, look, I've got this, I've been working on this for a while, and I've got this idea about these life insurance company and corresponding through these life insurance companies and booking my loans there. And I said, okay, let's do it. And for 2 years, that's what we've been doing. And for the most part, I represent buyers, sellers, but we're not going to talk about sellers on this panel. We're talking about buyers and borrowers, whether you're refinancing or you're looking for purchase money, and we get your deals done.
Sounds good. So, Matt, I want to turn to you for a second. For those that have no clue what this term life co means, and I actually did some research here. We went around to a lot of the people here, and for the most successful mortgage brokers, to the most successful, commercial investors, I see you heard about life insurance, buying. Like, oh, we heard about it. Some people do it. How would you define for those total ignoramuses? Explain what life co means in regards to mortgage lending.
Everyone knows what a life insurance company is, but they take a percentage of their annual premiums they receive and allocate it to commercial real estate. Usually the number is about 10% of their total premiums. Let's say they allocate $1 billion to commercial real estate. And we work with about a dozen of these insurance companies all over the country, underwriting, servicing, and bringing them good deals to do.
So the definition of life co is, for lack of a better term, when someone wants to get their business funded, the commercial investment funded, instead of going to a traditional bank, the life insurance company will fund it.
Yeah.
Now, Chaim, you do this for a living, right? It's safe to say that in our world, you're the most successful mortgage broker that deals with life co companies, yeah?
Hope so.
Oh, so that's the fact. Yeah, I did some research. So the fact that nobody knows about it, so you're by default the number one. But either way, the fact that you do it. So I want you to explain to the person that's watching this, whether he's a mortgage broker himself or he's a commercial investor, or either which way, what's the benefit? Like, in other words, I need to get my loan funded. I don't care how you get me the money. So what's the benefit of having a life co insurance company work with them?
First, we'll go to the other side of the non-life insurance, then we'll get to the life insurance.
Yes, go ahead.
You go to a bank and you send them in a file or a deal. They send you a term sheet. Sometimes you're happy, sometimes you want to be happy, and you sign it up. You go to underwriting. There's a big percent that in the end the loan will not be the same as originally underwritten or originally term sheet.
That's if it goes through.
Yeah. Versus a life insurance company, they created a box underwriting items. If it fits in the box, and they give you a quote, as I call it a term, you call it a term sheet, I call it a quote. The execution part is flawless. It's not 100% because nothing is guaranteed, but it's as close to that number that you're going to get that loan approved and funded.
And faster.
Sometimes it's slower, sometimes it's faster, but the idea is that the execution part doesn't exist in any form of other lending in the United States, like life insurance.
Mean to say like this: someone's coming for a traditional loan, right? And they go to a traditional bank, whether it's Fannie Mae, Freddie Mac, doesn't matter, or a real bank, right? The amount of paperwork they're going to ask you for, the amount of underwriting, all that stuff, right, is apparently much harder and traditionally than when it comes to life insurance.
Correct. So a Fannie Freddie, I would say, if you take a scale 1 out of 10, Fannie Freddie's probably up there, is 8, 9. They're very,
As far
very
as annoying
complicated.
is concerned,
Just
right?
paperwork alone.
Okay.
A life insurance company is probably a 2 or a 3, depending where you go. There isn't too much underwriting, but from the other side, they rely a lot on people like him, a corresponding company, to make sure that this borrower meets their box, and also that the borrower does what he says he will do. He'll pay the mortgage every month. So it's a combination of execution before and a lot of trust and reliance post-closing.
So I'm going to turn to Anthony because he's the underwriter, but I just want to clarify what you said. The end of the day is when you have your client comes to you, goes, listen, I need to fund, what's your average loan that you fund, by the way?
2 to 10 million.
2 to 10 million, but that's average. Means you don't as far as 25 as little as 2,
25,
3.
35.
25, 35 million dollars. That's no chump change. At the end of the day, if someone comes to you and they want to fund a loan, right? They want it funded. That's the bottom line. They don't want to go crazy to do it. They want to move on, work on their property and have a nice day. So with life insurance, we understand the provider, it just simply is an easier process and it's more guaranteed that what they see, their numbers they can crunch at the beginning, that's the final product. Make sense?
Correct.
Good. So Anthony, we'll turn to you. You're the underwriter. The bottom line is, from what I understood, is that what makes life insurance companies unique as far as funding is that they're actually relying more on you, right? You, maybe the mortgage broker himself, to make sure that what they're getting is what it is, right? So they must have, first of all, a lot of money, right? Because they're relying on you. They have a lot of money. But as the underwriter, someone who studies these deals, what advice would you give to the mortgage broker, somebody who's watching this later on? They want to get involved. Look, the end of the day is, we're going to get to your strangeness about why you're doing this in a second. But at the end of the day, somebody who's watching this panel, and they're a mortgage broker, and they want to get involved, they want to speak to you, what do they have to know as far as what type of deal gets funded and what has to be prepared?
Yeah, I think it's important as it relates to certainty of execution is really speaking to the correspondents that have relationship with the life insurance company. So the minute you call us and we talk about the deal, we're really vetting the deal based on the conversations that we're having. And then in addition to that, when we say, hey, send us over some financials, send us over some rent rolls, when we're going through them in underwriting, we're vetting them because we do certainly understand what the life insurance companies are looking for, what they'll point out, what we can redact, and so on and so forth. And in addition to that, we understand their stress test. So as we're going through underwriting, we know exactly what to send them, how to present it. So in turn, that provides certainty of execution and speed to the borrower.
If you're not in politics yet, I give you 5 years, by the way. 5 years till you're like, for sure, right?
Just as long as you guys back me.
Okay. So he's already prepared. Jeff, let's turn to you. So you're the lawyer, bottom line, who signs up on it, right? For lack of a better term, if we mess up, it's on you. You know what I'm saying? If everything goes smooth, you're fine. But if it's a problem, we rely on you. So tell me, how did you get involved in this specific field when it comes to life insurance funded loans? And what should the average person know as far as legalese are concerned? That's interesting.
Okay, well, one of the roles, the biggest role of the lawyer in vetting these deals is, and when I say vet, I don't really mean, I'm not doing it the way that these gentlemen are doing it. I'm looking at it from the legal perspective, and I want to make sure, like any other loan that I'm working on, I want to make sure that the lender isn't overreaching and that the paperwork is what we would call market for this type of deal. One of the interesting things that I've always pulled out on the life co deals is they have a very interesting way of stating their prepayment penalties. It is not, it's somewhat complicated. It ultimately, the math, and Nisano, you'll get this, I'm using my Ferris motion math. The math ultimately works out the same, but the way that they have their formula set up is a little bit different than what most banks do. It's not a standard 4-3-2-1 on a 5-year scale. It's not like that. And the concept for me, and I think one of the biggest challenges for me in representing borrowers and dealing with the life insurance companies is just making sure that they understand this is not a crazy thing. These documents are market. If they're doing it non-recourse, they're non-recourse. If they're doing it recourse, they're doing it recourse. If a guarantee is going to blow off after a certain amount of time, and just making sure that the clients understand exactly what they're signing. And so to me, it's not that much different than a regular loan that I would be doing with some of my other, some of the other lenders that I deal with that are outside in the convention hall. But the real difference is because these three guys do their job so well, I am not getting at the beginning of a deal a 15-page closing checklist where I'm chasing after a broker who's got to chase after the broker, and I, say Chaim and I, are not chasing after a client to supply us mountains and mountains of paperwork so that we can supply them to Anthony and Matt so that they can supply them to the bank. The entire system is significantly better and more streamlined so that these gentlemen all have collected all of the information that the life companies are going to need in order to successfully underwrite and clear the loans to close. And that makes the system a lot simpler.
Excellent.
Yeah, one thing I wanted to add, in fact, the checklist are typically one page, and if you're lucky, probably half a page. So
I was going to say not even a page.
yeah, not even a. It's certainly in most cases half a page for a checklist, which is pretty unique for a loan.
And then if you don't mind, Anthony, I'm just going to add one other piece to it. When we're dealing with our New York loans, and Anthony and Matt, they're dealing with loans all over the country. We here in New York State have this interesting thing called the mortgage recording tax. Chaim and I are extremely familiar with that. We know what the process is to get a consolidation, extension, modification agreement and an assignment from an outgoing lender, and we know the rigmarole that you have to go through with that. And I would say that one of the other challenges is to just confirm that the banking side, the Lifeco side, understands that that's what type of deal this is, so that we get them the paperwork that they need in order to make that happen, and that they understand that the timing on that does not always fit, and there's not much we can never do about it.
Right. So just to clarify what makes it unique, because like I said, banks generally rely on themselves, right? They do the diligence themselves, and they hope you're not lying to them. At the end of the day, the life insurance companies are a little different. They're relying on you, they're relying on the broker, they're relying on the dependent, relying on his underwriter to make sure that the loan actually works. So therefore, they're more selective in how it goes. So I want to just address an elephant in the room, okay? Chaim called me up, and I have to put you on the spot because it's very strange. He called me up and he says, look, I do life insurance, I do mortgage loans, I'm very successful at what I do. He told me off the record how much he makes. He's very successful at what he does. And I didn't say the number, it's all good, relax. And the fact is, I said, if you're so successful in this idea that you know how to get loans funded faster, easier, like, what are you, stupid? You're gonna go tell people about this? Like, what's wrong with you? I don't understand. Like, keep your secret sauce to yourself, make money, retire early, and call it a day. Like, what do you gain by having a panel like this? You're going to tell people about it. You're going to educate them. So I'll tell you the real reason in a second. But first, I want to hear what you say to that point. Like, what's wrong with you?
So our community, which is Jewish community, is one of the most unique communities in the United States, in a sense that a big percent of people under 30 own properties.
Thanks. I feel very good now. Yeah.
As they go from New York to New Jersey to Connecticut, every year there's another generation that becomes 20 and 22. They want to get into real estate, and they do get into real estate.
Is it too late for us? Too late for us? No, still hope. Okay, very good.
Which means that the opportunity is always there. There's so much business on the street, which brokers can do and they should do. I'm only one person with my team. I have a big team, but we can still only take on a certain percent of business. People, some of them do deserve life insurance, and if they find it appealing, they should get it. The reason why I'm really here is to educate and talk to people, get to know the program,
Yeah. So
find out what it is, if it works for you, and you're willing to do the work to satisfy these life insurance companies, you'll also be very, very successful. I usually take on clients, but I send more away than I take on.
So he's being a little humble. I'll translate into English. Basically, what he's trying to say is like this. The fact is, he says, I do okay, I do well. I don't think having other people have the same opportunity to be successful in this is going to take away from my business, from my parnassa. So why not let other people be successful as well? And for that, I'm giving you a round of applause. That's actually incredible. And so he put together this whole panel, and I think it's an incredible job. I think it's amazing. So Shane, let's turn to you a second, right? Yeah. One of the things that's going to happen by default, and this happens often, right? A guy's watching this, he's like, first thing is like, wait a second, I need to get into this. So what advice would you give to a mortgage broker specifically that he wants to start getting life insurance funding for his clients? What would his next step be?
As a broker?
As a broker, yeah.
Yeah, to reach out. You know, the life insurance companies only want to work with their correspondents who they feel comfortable that's going to bring them deals.
Just to clarify, how many years did it take you to develop that relationship with them?
Like 15.
Yeah, okay, so everyone who's trying now should give up. So they should speak to you.
Listen, there are a lot of me around, right? So to reach out to other correspondents, and we represent about 12, 15 different life insurance companies, and most correspondents work with multiple insurance companies. So just each of them have their own different programs. Some like small loans, some like big loans. So they're just.
Reach out to you, basically. Basically call you up. That's the bottom line.
Yes.
Excellent.
Yeah.
We didn't work out our commission structure, but after the panel. Anthony, I want to turn to you. One of the things that Charlie told me before we started was that, as he understands, a lot of people will try to get into this field, and rightfully so, right? At the end of the day, a mortgage broker has two interests in mind: helping his clients and helping his bottom line, which is totally fine.
Sure.
And when someone comes to them and they want to start working with the life insurance companies themselves, they have to have everything prepared properly. And one of the things he taught me, right, is that you want to make sure that, first of all, people don't mess up in the presentation. At the end of the day is, life insurance companies, as of now, the way I understand it, are very, let's call it, easy to fund the loans if they get what they need. Mm-hmm. But the bottom line is more and more people present things that don't really work out. They might get more worried, and you want to make sure that everything is on the up and up. So what advice would you give to a broker who's representing his client? What does he have to know when preparing the books? What type of deals are they looking for that's going to work?
Well, the good thing is that traditionally all of the life insurance companies technically look for like the same thing when we're putting a presentation together. So
what is that thing?
So typically when we have a conversation, we'll follow up with a simple email. We'll say, hey, look, we need some property photos, historicals, a little bit of information about the sponsor or the borrower, some comps if they have them, and things of that nature. So, and it's very consistent with all of the life insurance companies. So, that being said, when we're presenting or putting together our packages, it's a very streamlined process, and it's very consistent in that regard.
Run me through the process. Somebody calls up, he wants to apply for, you ask a loan, he has a client, $20 million property. What happens next? What are you asking for? Let's hear.
So typically it starts with a preliminary conversation with the broker. They talk about the deal. Back to what I said a little bit earlier, we'll ask for some financials or rent rolls. We'll underwrite the deal. We'll put together a whole underwriting model. And then that we'll be able to size it up, have a high-level conversation with the lender, make sure it fits within their box and their parameters, and then we'll typically ask them, hey, would you like us to put a nice package together? That's where we can add a lot of value, is when we put together a nice presentation. When it lands on the lender's desk, it has everything that they're looking for, so they can take it to their committee, and hopefully their committee will not have many questions. And the neat thing is these committees at these life insurance companies, they're not very large. And typically it's the same committee almost all the time. So if it's a deal from Matt Shane, the committee's like, oh, great. He's always sending us good deals. It's very simple. The response is quick. We were in San Diego a few months ago. We met with a life insurance company, and their committee was literally one guy. So you can imagine.
I know a guy, right?
Yeah, exactly. So you could imagine the consistency that borrowers and mortgage brokers get when they use a life insurance company. If you're doing a deal in California, or if you're doing a deal in Michigan, you're typically speaking to the same originator from that life insurance company and also presenting to the same committee.
So Jeffrey, I'll turn to you as far as the finance is concerned. I think this sounds too good to be true because the bottom line is you're making a living, it's working, right? But why? In other words, why is a life insurance company suddenly able to fund a loan that much easier, that much quicker, that much more efficiently than a bank? I mean, what's the reason behind it?
Okay, so that goes to the whole concept of what a life insurance company is versus what a traditional bank is. When you go to, and I don't mean to pick on any other lender, so I'm just going to pick a huge bank. I'm going to say Chase, okay? Because I'm just picking a huge bank.
They're a sponsor, by the way. No, I'm kidding.
I know.
Okay.
I saw them out there. When you go to Chase, where's Chase ultimately really getting their money from? They're borrowing their money from the Fed, and that's how they're funding all of their loans. They're not necessarily taking their own money, or they're syndicating their loans through all kinds of other funding methods. When you're talking about the life companies, what they're doing is on a monthly basis, they're collecting life insurance premiums. Those premiums, when you have a guy, I remember when I first got married, one of my insurance guy said to me, he said, "Oh, now that you're married, now you need a life insurance policy." And I'm like, "What the heck do I need a life insurance policy for? I'm 20 whatever. I don't need a life insurance policy." He said, "No, you need a life. You have a wife and you're going to have a family. You need a life insurance policy." And since then, I pay every month X amount of dollars to the life insurance company. Where does that money go? They're not just holding it in their pockets. If they kept that money, what are they making on it? They're keeping it in T-bills and making a quarter point on that money? No, they've got all of this money, this pool of money that's coming in on a monthly basis, and they need a place to put it. And they're willing to risk, like Matt was saying, they're willing to risk up to 10% of what they're collecting on a monthly basis. Up to 10% they're willing to risk in putting it out on the real estate market where they can undercut Chase because they're not borrowing from the Fed or from other borrowing sources at that level. So they're able to put this money together, and they're able to put it in play in the marketplace. And as long as the loan is what fits what these guys are doing, the life insurance companies are more than happy to put that money in play for, whether it's a 5-year loan or a 10-year loan, because by the end of the day, they're going to make more money.
Go. You want to add something?
Yeah, I mean, just to add to what Charlie was saying, it's great that he wants to bring the product out to the world and get as many borrowers familiar and mortgage brokers familiar with the life insurance product. One thing that we don't have to worry about is the life insurance companies. It's funny, anytime I introduce a borrower or mortgage broker to a good lender, they say, how much of it can they do? Because they want to do as much as they can. One thing we don't have to worry about is the life insurance companies running out of money. We've just recently, over the last 3 or 4 years, we've seen a lot of consolidation of private equity companies buying life insurance companies. Apollo bought Athene, Blackstone bought AIG, KKR bought Global Atlantic. So you see a lot of private equity companies getting into the life insurance space because they're just making a lot of money. So there's certainly a lot of liquidity out there and a lot of money for deals to do these life insurance companies.
Hey, you want to add something? Go ahead.
Just to add to Jeffrey, this will be somewhat shocking to a lot of people here. A lot of bridge lenders, ultimately their money comes from a life insurance company.
But
they don't even know that it comes from there. So the bridge lenders take their money from a hedge fund that takes money from a life insurance company. So ultimately, a big portion of mortgages in the United States, I think up to 15%, is
15%.
held in the United States. Close to $1 trillion is held by a life insurance company, either knowingly or unknowingly.
So let me ask an open question to you. How many, again, up to you to share or not, right? How many deals how many loans do you fund a year?
I try to get to close to 70 to 80 deals a year.
70 to 80 loans a year. And
About.
Ask them how much money in loans he
Well,
closes a
well,
year.
first of all, we do math. Okay, let me tell you how it works with the conference, right? Let's back up a second. I always tell these guys, people always wonder, why do you need sponsorship at an event, right? Because everyone comes to an event, they do math. $400 a ticket. There's like at least 5 million people here. Times $400, they made $5 billion bank. Okay, these guys are killing it, right? That's the reason why you need sponsors. That's right. He set his average. They did the multiplication. It's over. They know it. People are coming in for a loan afterwards. He's the new life insurance company. No, I'm kidding. But let me ask you a question like this. At the end of the day, there's two types of people that are going to be watching this that are relevant to this field. The first is an investor, right? Someone who needs the loan. The obvious solution to that, call up Chaim after, right? What's your cell phone number that you're in for business? Let's go. What's your number?
347
347
546
546
7561.
7561. Okay, scan the QR code on the bottom of the screen. They can probably put that on. It'll open up a WhatsApp. This is Marketing 101. We'll talk after. So we know if somebody wants a loan, they can come to you. But, like you said, you wanted to help mortgage brokers. And at the end of the day is when, you didn't want to hurt this field, right? For people that are starting this field, they wanted to be successful. So if someone comes to you and says, Chaim, I want to start doing what you do because I want to make a lot of money and I really want to help my clients. What are you going to tell him? What's his next step? I know what Shane said, what they call him, but what would you say to him?
He should look at the next deal that he wants to present to a life insurance company as if it's his own money and it's his only money that he has.
Own and only money.
And does the deal make sense? Would he have funded the deal? If the answer is yes, then he should present it to a life insurance company. If the answer is maybe, you should do more due diligence, get more documents, even though a life insurance company doesn't require a ton of documents, tax returns, bank statements. Do your own due diligence to see if you would have done this deal with your own money and with your last money.
It's a very interesting thing. You just said, would you fund the deal yourself? And everyone shakes their head like, no, right? So Anthony, you said something very interesting before, which I want to touch upon, and I think I don't know if you meant to say, but it's very interesting to me. The end of the day is Matt's the one who's dealing with the lenders directly, and he's relying on you. So you said something very interesting, which I want to touch upon. You said when you speak to the broker, right, you're going to gauge through the conversation without seeing any financials if everything is legit. You use this word called stress test, which made everyone stressed. But please explain, 'cause I'm always fascinated about the human psychology, which obviously you're dealing with. In every deal, there's the bottom line and there's what's really going on. And you're trying to gauge that just by the conversation. I'd love to hear what sort of things you've learned or picked up that says a shady deal from another. But I want to add before you continue, the end of the day is the broker also has to do the same thing for his client, right? The fact is, just as the broker needs to represent the client properly, kind of like a lawyer representing a client, you want to know if he did it or not, right? So the same way here, how are you gauging whether either the broker's doing correctly, or do they ever put you in touch with the client themselves to speak to? I'm sure. Does the broker ever put you in touch with the client themselves?
Yeah, absolutely.
Excellent. So do you have both these barometers? What are you picking up to try to figure out if somebody's doing the right thing or not? I'm curious.
I think, just really by just having normal conversation, just talking about the deal, really learning, if we do get a chance to speak directly to the client from the mortgage broker, we ask them probing questions like, what type of properties do you have in your portfolio? Have you ever done a life insurance company loan? Things of that nature, and really just kind of having being an adversary for them, an advisor for them, knowing that we're on their side and our goal is to really fund their loan. So we just ask probing questions to really just gauge the level of competency from that.
Yeah, I don't like that answer. I want to hear the real answer. How do you figure out when someone's being shady? That's the bottom line, right? That's what you're trying to say. So I want to hear that.
Well, we don't come across a lot of shady borrowers. We really just don't. I think, SF Capital has built a great reputation.
That's Matt's company.
Right, yeah, exactly. And, some of these life insurance companies we've been working with for 15, 20 years, to Matt's comment.
I didn't mean to let you go ahead.
So when folks come to us, they know that, we're legitimate and we're going to put forth good products. So quite frankly, borrowers and brokers don't waste their time sending us shady things because it won't.
I like that. Matt, let me ask, we're talking so positive about this whole Lifeco thing. What is something, I'm saying negative, we were talking outside, we had a conversation before, and we were saying that life insurance, although they're easier to fund, but they have certain parameters that work, and they want those parameters. So what are some of the things that, in a way, make the loan more difficult, although easier to work through? What are some of the things people should be aware of?
I guess they're more conservative in their underwriting. The loan-to-values are typically a little bit lower than the other lenders that are out there. But, listen, I think our most successful clients usually take, they understand, maybe a little shorter amortization, a little less proceeds. At the end of the day, when the loan's paid off, they're going to own it free and clear.
And also, at the end of the day, people who are dealing with the $10, $20, $30 million, efficiency and time is very valuable to them as well, to getting it done, it done sooner.
I think the borrowers who are in the most trouble are the ones that have been taking out these interest-only loans and not paying them down.
Jeff, let's turn to you. We're in New York, right? The bottom line is everyone loves talking about Michigan, all these other places. That's what these guys are from. But end of the day, New York lending, New York industry, New York real estate is a little different, let's say now, than the rest of the world. So what have you found in regard to these specific loans? Does it still work for New York? Does it not? What have you found?
Oh, I've been finding that these types of loans are working extremely well here in New York and in New Jersey. I do have in the back of my head, and I could be wrong, and Charlie would know better than me, but we may have even done one or two of these in Connecticut, I'd be willing, we could probably try them in Pennsylvania as well. And I think that they've all been working out extremely well. I think at the end of the day, what's making my clients happy when they're doing the life co deals is it's less stressful. They're giving a smaller amount of information, and they're giving more complete information, 1, 2, 3 off the bat. The banks aren't killing them for more and more and more. The bank attorneys aren't killing them for more and more and more. They're not driving the title companies crazy. They're not driving the attorneys crazy. And so the deals are closing, like Charlie said, sometimes a little bit longer, sometimes a little bit shorter. On average, I would say a little bit quicker. They can move a little bit quicker than those traditional loans. And at the end of the day, they're getting better rates at lower costs. So they're walking away from the table and they've got more cash in their pocket.
What do you mean by better rates and lower costs? Explain that.
Okay, so the interest rates themselves are extremely competitive, and even more so, they're top flight as compared to the more traditional lenders. Certainly as compared to the hard money lenders, it's not even a contest. And as far
Really?
as the overall cost, well, there's a reason why somebody's going to a hard money lender.
Obviously, yeah.
So, but even the overall costs of the loan are much less than certainly going to a hard money lender where you're paying 2 points in, 2 points on the back,
Right.
And certainly even on going to a regular large institutional lender. And dare I say, since it's a little bit less work for the lawyers, even us the lawyers are collecting a little bit less because we're doing less work.
Right. You're sure you're a lawyer? Yeah, go ahead.
I know. But I've got to say it for the borrowers out there.
Yeah.
Right.
Just one thing to add on Jeff, the post-closing.
Yep.
Oh, God, no nightmares post-closing.
No.
Right. So the life insurance companies, there are really no what's the word?
Covenants.
Covenants, right? So the banks, the CMBS, right? The reporting requirements. There's we do an annual inspection. We ask for an annual rent roll, and as long as the loans are being paid, no one's bothering you.
You want to add something about New York. The bottom line is you have a lot of clients who do try to work in New York. What have you found to add to what Jeffrey said?
You go to a traditional bank.
Can't hear. He's turning on the mic now.
When you go to a traditional bank, you probably will be about 0.5 to 0.75% higher interest rate than a life insurance company.
That's real money.
The reason why, it's their own money. They don't have to go out, they don't have to borrow, they have to put it out. So as the year goes by, like September, October, and they still have a chunk of money, they get desperate.
They get
so they
nervous.
give better terms, just take it.
Interesting.
And obviously it has to fit in the box. But they're definitely cheaper in rate. Also, they're willing to do longer terms. They're not looking for borrowers that will take 2-3 years and just refinance. They want the borrower to stay with them. Versus a bank, as new ownership comes in or new people come into the bank, things change, terms change, get back the money changes. A life insurance company is the opposite. Once you're in, stay here. They want to put the mortgage on the shelves, they told me, just pay it. That's the
Interesting.
concept of...
But what about
To
specifically?
add something to what Charlie is saying, from the lawyer's perspective, I love when my clients do a hard money 5-year interest-only loan. I love it because I know that they're back within 5 years, regardless of what the penalty is going to be. They're back within the next 5 years to redo the deal. Whereas when you're doing it with the life cos, I'll see the same client with other properties, but I won't see the same property popping up every 3, 4, 5 years.
Bunch of holy people don't want to make money. Okay, yeah. The bottom line is, but in New York and New Jersey, what have you seen with New York and New Jersey loans?
In terms of what?
In terms of, do they work just as well, even with all the regulations or whatever's going on?
It's something very interesting with life insurance that it's been around for decades, the lending part of it. But as I started bringing them deals, they were somewhat shocked and surprised that for years and years and years they tried to compete in New York. But New York was always the banking market. The banks were dominating mortgages. All of a sudden, some broker out of Brooklyn keeps bringing them deal after deal, and every
By the way,
deal.
just to clarify, you mean yourself?
Yes.
Go ahead, yeah.
And every single deal that they quote gets signed up. So they were somewhat shocked what's going on till they got to know the New York market, till they got to see other term sheets and see who they're competing with. And as word of mouth spread that they are signing up deals, some other brokers went to them, some of them successful, some of them unsuccessful, but they also had to learn the market literally from fresh over the last 3-4 years.
So the answer is what you're basically saying is that it does work, right? It makes it easier in a certain sense to fund even New York, New Jersey loans.
Correct.
Excellent. All right, so I want to just...
Whatever
sorry.
they say, obviously it might be in the end something going on with the borrower that can change things, but if the borrower is
Presented this thing, had to do this,
and everything checks out, it's almost 100% success rate.
Wow. Okay, I want to just shift gears for a second. So you mentioned the word stress test. So when I write the articles in AMI Magazine, one question I ask everyone is, how do you handle stress? And the 1 week, I used to ask every single week, I used to ask that question, how do you deal with stress? And I'm like, it gets a little boring. How often can you write marijuana, drug? No, I'm kidding. They don't usually answer that. And a few weeks I stopped writing. And then people wrote into the magazine, no, I need to know how to handle stress. So bottom line, life isn't easy. And you deal with money, you got to close, especially in the industry that you guys are in. It's not like you're getting paid per hour. You're getting paid when you get your business. So I want to ask, how do you handle stress? I'll go to you last. Jeffrey, let's start with you. How do you deal with stress in your life? You're busy, you're stressed, you're nervous. What do you do?
All right, there are 2 ways that I handle the stress. Really, 3 ways that I handle the stress. First off, the best solve for stress for me is when I'm feeling really, really stressed during the day. I'll pull out my phone, I'll look at the pictures, and I'll take a look at my grandchildren, and that de-stresses me 1, 2, 3. But I don't always have the time to sit there and scroll through pictures. So during the course of the day, I have playing a Spotify playlist of calming classical music.
Really?
And that keeps me, when I get stressed, I just think to myself, dude, go with the music. Go with the music for a second, and it calms me down. And then the second thing I do, the third thing I do at the end of the day to de-stress myself, after I've had dinner with my wife, after I've helped her with everything that she needs help with in the house, honestly, I can say it to this crowd, I go to shul, I daven Ma'ariv, and I sit down for an hour, and I usually focus on the parsha, and just takes my mind off of all of the other stuff. And I know Nisano is probably wondering, no, I do the daf much earlier in the day.
Before stress starts. Anthony, let's turn to you.
Right.
If you have stress, you're 32. Anyone older than 32 is upset at you for being 32 anyways. So, but let's hear, how do you handle stress?
Do more deals. No, in all seriousness, I think it's all about perspective. During stressful times, I like to just kind of take myself out of the situation and just ask myself, am I in a position where I wanted to be 5 years ago? And if the answer is yes, I just forget about everything else.
And if the answer is no?
If the answer is no, then I'm really stressed. But no, in all seriousness, too, we have a great team at SF Capital, and being around a good environment with the right folks really gets you through this market.
Okay. That's a good answer. That's called the power of answer. That's what that means afterwards. What do you do, Shane?
What do? I call my mother. No, no, I go to the gym. That seems.
Oh, really?
Yeah.
I used to like you till this.
The gym. During the summer, I play tennis. During the winter, tennis. Golf during the summer. But yeah.
You work out?
Yeah, a couple days a week.
Okay, thanks.
Always. No.
No,
No.
Kai, what do you do when you're stressed?
Figured it out yet?
Yeah, figure it out. Usually you say you're not stressed, right? Some guys think I'm not stressed.
I have one more answer. You do more life insurance company loans. They are, the other lenders we work with, a lot stressful. You don't know what your rate's going to be. You don't know if you're going to close. You do more life insurance company.
Well, he's actually not lying. We spoke before. They really said, I'm not saying it's an easy thing because you have to find the person who wants the money, but at the end of the day, once it comes, it does work.
And the borrowers are a lot less stressed too,
Right.
because of these life insurance companies' loans. We can't tell you how many times we do other types of loans, and there's a lot of stress involved on both sides.
So the answer to the stress is only work with life insurance companies. I got you. Okay,
Right.
paid for by now. And how do you deal with stress?
So the second I walk into my house, all the stress goes away. I can have the most stressful day. I walk in at the house, I see my family, it's done. Like,
Do you put your cell phone away?
No,
Wow, you're amazing. I don't know how to.
but at least I get to see them and
Okay.
talk to them, but they're all correct in a way that if you do get to sign up more and more deals, even with the stress, if you know their program, you know how it's going to end up. It's not a guarantee, but you know basically a high percentage of how the loan is going to end up. The stress is only getting the documents submitted to the lender. Everything you've done before you submit it, when you have submitted the loan already, it makes life a lot easier.
Got you. I'm going to end with one question I'd like to ask everyone, because I think the people watching has got a pretty clear picture of what LifeCo is. And if not, two things. A, they're going to reach out to you. B, if they're here at the event, they're going to see you afterwards. We already discussed that you're going to go right outside here, out there. Everyone's going to line up, ask you all the questions, give you information, scan your card, and they'll learn whatever they want. But something I find always when we talk about stress and difficulty in life, I often find everyone has their motto on how to keep going forward. I've interviewed, as of this day, probably around 700 to 800 entrepreneurs, most successful people. And what I found, and I'm not sure how to capture this in a bottle, but the most successful people are the ones who keep on going despite difficulties. That's the common denominator of every successful person I've ever interviewed, is that they keep on going. If you'd like to know the answer to stress, this is what I actually found that works. I'm not saying that I do it, but at least this is what works. The most successful thing that works when you're actually stressed is to take yourself out of the situation. You're in a room, you're angry at your kids, your wife, your husband, your boss, whatever it is, just walk outside for 5 minutes. It's the only thing that scientifically works that across the board. So I'm going to go in order. Jeff, you're going to go this way. I want you to imagine that you're sitting in a room with anyone here, anyone's watching this, and they're going through a difficult time in business, they're trying to close more loans, whatever it is, yeah? What would you say to them? Don't talk to me, talk to them directly. What would you say to them that gives them inspiration to keep on going? No pressure, by the way.
It's a hard question.
And that's what
Okay, no, I've got what I think is a good answer, and it's what I tell my kids when they're stressed out about finals, about tests in school and schoolwork and all of that. What they're going to do for the rest of their lives. So my kids, Baruch Hashem, are a little bit older at this point. They're much more thinking about that stuff now. And I would tell you, everything will work out. You continue following your passion. If you follow your passion, everything else will work itself out. Don't worry about these other details surrounding it. Just follow your passion and keep that focus on achieving your goal, where you want to be in life, and all of this other stuff, it will all just work itself out.
I love that. Anthony, what would you tell somebody?
Yeah, and I agree with him. To piggyback it, I certainly agree with that. And really to not give up, because there are going to be challenges along the way of following your passion. But not giving up is, I think, probably one of the most important things. There's a story, there's two mice that fell into a bowl of milk. One just gave up and drowned. The other one churned as hard as possible and climbed his way out. I think that's certainly important. And then also, just overall, doing what you love and being happy about it. I think that's just a natural way to motivate yourself, is to ask yourself, am I happy in what I'm doing? If the answer is yes, then keep doing it.
Love it. Shane, what would you say?
I would. I was going to say, I have two girls, and just be happy. Yeah.
Just be happy.
Be happy. Work hard.
My rabbi always tells me, he says, being happy shouldn't be something you work on. Just be happy. Don't think about it too much.
Right.
And I will end with you. What would you tell somebody?
There's light in the end of the tunnel. There's always, hope is always there. There's always light at the end, even when it's difficult, hard, loans don't close, or you have a difficult time with a borrower. There's always be another borrower, there'll always be another bank, there'll always be another person to make you successful or be successful.
I love it. Guys, thank you for coming. I think it was very informative. Give a huge round of applause to the panelists. Thank you so much. Have a great day.